the most overvalued, inflated stock markets in U.S. history. So if your future, if your finances are tied to the stock market, you've got a 401k plan, you're putting your money in the stock market because you think this is the answer, you better pay attention. You better pay attention to the numbers I'm about to show you and why smart investors like Warren Buffett and others have been selling stocks like crazy. Why? Because according to Buffett and others, this stock market is massively overinflated, meaning the valuation of these stocks has been artificially propped up by the likes of the Fed and excitement around all of this sort of free money that's floating through the economy. You know, where do you put your money right now if you're one of these big companies that's received billions of dollars in bailouts? You put it back into the stock market, where you hope that at least for a few days you can make some good money, pull it back out, sell it, dump it, keep moving. If you've got the Federal Reserve that is pumping so much money into the stock market, basically by buying up all of this junk, all of these junk bonds, these corporate bonds, and they've telegraphed and said, hey, we're going to continue doing this for years to come. All you need to do is look at certain companies that should be priced way lower and see that they're up 70, 80, 100, 200, 300% in value based on what? Because the fundamentals haven't changed. Only the numbers have. See, the stock market is totally out of whack when compared to the rest of the economy. You know, the jobs numbers that we just got today are pretty anemic. The jobs numbers that we got today are not very good. We're only rising by 661,000. That's well below Wall Street's estimate of 800,000. And thousands of people furloughed or lost their jobs over the past 24 to 48 hours. In the airline industry, Disneyland, other places. Disney, 28,000 workers laid off. These numbers do not account for, of course, the millions of people that stopped looking for work altogether. Upwards of 30 million. Any way you slice this, this economy is slowing down. This quote unquote recovery is not looking good. Just listen to some of these economists. For instance, UBS economist Brian Rose said, this is not an environment for creating jobs. The pandemic is still going. The economy is still in a very severe downturn. From a labor market perspective, that's why, that's fine. Wall Street is totally out of whack with Main Street. They're fine with the labor market being down. They're happy, though, that people still want to spend money. So Wall Street is happy that people want to still, buy stuff online. Sure, they're out of a job, but they want to buy stuff. Wall Street doesn't care about jobs. Wall Street cares about itself. Wall Street cares about corporate profits. Wall Street cares about the housing market. Wall Street cares about the state of the presidency. And so you saw a little correction this morning as the Dow plunged about 400 points because President Trump tested positive for coronavirus. So at least it seems like, well, that's something that makes sense, right? Wall Street panicked because we don't know what's going to happen with the presidency. So they're only really cared about themselves. What's going to happen with the chaos of the presidency? Will Vice President Pence become president for a short time if President Trump has to get treated at the hospital and is incapacitated? Would they invoke, under Section 3 of the U.S. Constitution's 25th Amendment? So Pence would become president for a short amount of time? We don't know. And Wall Street doesn't like that uncertainty. But the price of stocks is rising while the economy is falling. Does this make any sense to you? Again, stocks continue to go up, the economy goes down. People lose their jobs, stocks go up. This is leading right now to the most overvalued stock market in U.S. history. And what happens when you have an overvalued stock market is eventually you will have to have a correction. And what does a correction mean? Crash. That's a nice way of saying crash or collapse. So if you've got your retirement money and the only thing that you have is money in a 401k and it's tied to the stock market and it's tied to volatile stocks, most people don't even know what's in their 401k. Most people don't know that they're paying thousands of dollars in fees to even have a 401k. I think a 401k is awful. I think it's a terrible investment vehicle. The only reason I would encourage you to use a 401k is if your company matched a certain portion of that money. And even then, it's not all that attractive because a lot of times the company is matching its own stock. So you work at Ford, you get Ford stock in a company match. And only then, after you're fully vested for a long time. I'm going to show you a chart, though, that it's mind-blowing. Pay attention to this chart because I'm going to explain why this is so important here. This is a measurement of GDP versus the stock market. Now, at the bottom of the screen, I'm going to show you is GDP, okay? Now, GDP, of course, mostly is fueled by you spending money. Gross domestic product. 70% of GDP in the United States is fueled by you consumer spending. Going to the mall, going to the movies, buying clothing, back to school items, computers, etc. So we're spending money. But the stock market is incredibly out of whack when it is compared with GDP. Typically, they kind of work in tandem. And anytime one is way out of whack, something funky is going on. So take a look at this chart. This is out of whack. Take a look where we were. I'll go back a little bit in history here to 2000. And you can see an increase in GDP on the bottom here, right? But you can see up top how high the stock market was. This is, of course, during the dot-com boom and bust, right? Out of whack. And what happens? You have a correction and a decline. Look at that decline right after that. Look at it drop. Huge drop, right? Recession. Right there. See, not that much different than GDP, right? GDP is still kind of okay. And then huge decline in the stock market. People lose billions of dollars. Then let's go a little further. Let's go on up to 2007 when we saw that decline. Again, decline in GDP, huge decline in the stock market. Very much out of whack. Now look at the stock market compared to GDP. Look how out of whack it is, folks. How high it is. So when you have this differential, something gives. Something gives. So what is going to give? There's two ways that this can go. Number one, and the more positive approach, I hope, and I'm hoping, is that the economy improves so much that it comes up to meet the ebullience right now, the excitement in the stock market. That's one way, right? It can come up. So if you think the economy is going to recover, but if you listen to economists right now, again, Brian Ross, economist at UBS, says the pandemic is still going. The economy is in a still very severe downturn. And with all of these jobs lost, continuing, I don't see it getting better. Tell me where it's getting better. It's getting better for a certain portion of people, which is the top 1%. It's not getting better for the rest of us. Then on top of that, so that's one way we could come together and meet right in the middle, is if the economy does better. But the other way, it's number two, is if the stock market crashes and corrects. So what do you think is going to happen? Again, I was a history major in college. If you do not pay attention to history, you will repeat it. We have to learn from history. And all you need to do is look at this chart. This is history staring you right in the face. What happens after one of these weird periods? A huge collapse. We are in the most overinflated stock market in U.S. history right now. Look at that. As it's compared to GDP. So the economy continues to go down in the toilet, and the stock market continues to go up. Something has got to give. Okay? Something is going to happen. If you want more information about this and all of business-related news that I think is important to you, you're not going to see them talking about this on CNBC. Okay? You're not going to see them talking about this on the corporate-controlled media. They're not going to talk about it. They're not going to tell you to stop investing in a 401k. I am. Put your money in real estate. Put your money into precious metals. Put your money into the people's currency. Put your money into a smart savings account alternative like Outlet. People ask me the other day, I use it all the time. I have thousands in there. I moved my entire savings account over to it because it's backed by cryptocurrency, Ethereum. So if you go to morninginvest.com/outlet, you can put your savings account here. It's just a savings account, but it has a 6% interest on it. 6%. And they actually will deposit free money into your account if you use our link. If you don't use our link, they won't give you the free money. So it's morninginvest.com/outlet. I'm a huge fan of them. They're backed by cryptocurrency. So they're not tied to your typical bank where you're going to get 0.001% interest. So you've got to be smarter with your money right now, folks. I'm giving you the warning signs. If you've got a 401k and you can't leave your business right now, you're unable to touch that 401k. The good news is that during the CARES Act, we now have the ability to tap into that 401k. Please look into this. You're able to take out up to $100,000 without penalty in the CARES Act. You only have until the end of the year to do that. And start to think about how you can reinvest that money. Put it into something safer, something that's not tied to the volatility of Wall Street. Why would you want money in Wall Street? What have they done for you? Why would you want to own a piece of Wall Street? I don't get it. You owning paper assets in a company. Don't do it. They want you to do it. They want you to do it because Wall Street gets rich. You don't. How many of you feel super wealthy with your 401k? It's built on a faulty premise. The idea of investing with a 401k is built on a faulty premise. The idea that you're going to retire wealthy, that you're going to live off of this pile of cash for the rest of your life when you retire. The average 401k at retirement is about $90,000 in America. When you retire, could you live off of $90,000 for the rest of your life? No. No, you can't. But that's it. We've all been lied to. We've all been told that that's the way to invest. So heed my warning. We are sitting on the most overvalued stock market in U.S. history. Something has to give. Either the economy comes roaring back to life, millions get jobs, or there's a stock market collapse. One of two of those will have to happen. I'm not going to risk it, and you shouldn't either. Subscribe to our daily newsletter, by the way, folks. First thing in the morning, it's delivered to your inbox, morninginvest.com. Here's what it looks like. If you just tuned in, it's very simple, very clean. We cover the stories that matter to you. Like here's our news by the numbers section. Covered like how many H&M stores are closing. There's 250 of those closing. Look how many Amazon employees, by the way, just contacted coronavirus. 19,000 Amazon employees have tested positive for COVID. That's in our store. That's in our newsletter today. So just go to morninginvest.com. It's how you subscribe, and it'll be delivered to your inbox first thing in the morning. So our thanks to all of you for subscribing. Hey, I want to thank all of our new channel members who joined us today. Thank you so much for joining us on our channel members only Chat Friday. We've had 25,000 people watching today. So thank you so much.